obviously that then leads you to the question, well, what can you reasonably expect? And I think that's a really fair question. It's a question that I get asked a lot. And it's a question I never used to like answering it because I guess because it's a hard question to answer, but I think it's a really fair and valid question that people have. And, opinions on this will vary, what is realistic for a part-time retail trader to make. But in my opinion, it's realistic for part-timers to realize a Sharpe ratio of around 1 to 1.5 in the long term. You can probably do a little bit better than that if you trade really broadly and if you're consistently really good on the operational side. It's a bit of a story for another day, but given some of the opportunities in crypto at the moment, you can probably do a little bit better. But maybe we can go into that later or another time. But anyway, the most important thing to realize when you're thinking about trading returns is that they're really uncertain. So, excuse me, even if you have this 100% certain edge, you can never know the sequence of trade returns. You never know how it's going to play out. And of course, we never have 100% certainty in our edges anyway. So I think it's number one. It's realistic. It's important to be realistic about, that Sharpe 1 to 1.5 sort of ballpark. And I think it's also important to know what that actually feels like. And if you look at, the return distribution from a process that generates a Sharpe of 1 to 1.5, then you find some pretty scary things. You find that it's quite realistic that you might sit through a drawdown of 200, 300 days. It's entirely possible that you won't make money in a given year trading at that sort of Sharpe ratio. But I think that's realistic.